Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here's some notable token price moves and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, guys, we are officially 8 days post ETH ETF. Yesterday was the first day, actually, where we had net positive inflows, since most people are we're seeing a lot of outflows from the Grayscale ETF product, which, if you recalled, was a closed-ended trust product, and it ended up converting to an ETF. And so people who've been basically locked up in the trust the last couple of years are able to redeem for ETH. And so that's why we're seeing a lot of outflows this week. So finally seeing some positive net inflows this week, and we'll continue to see if that grows over the coming weeks. Also, in the kind of broader news, about $2 billion in Silk Road seized Bitcoin was moved by the US government end of the week, which really spooked the market. TBD on how and if this Bitcoin will be sold. And then finally, I guess in the more macro spotlight, the Fed did not cut rates today. Pretty much everybody is expecting this September rate hike to happen at this point, though. But we're here to talk about tokens, so we will dive right in. Okay, so first up, we're going to talk about Avalanche. So last week, AVAX Labs, the for-profit company behind Layer 1 protocol Avalanche, saw the departure of its head of engineering, Patrick O'Grady. So O'Grady was kind of credited with a lot of Avalanche's technical work related to consensus upgrades and developer toolkits. So a lot of folks are thinking of this as a bit of a loss for the project. But, as most projects will, they will continue on even without, key people involved. In better news for them, though, the California DMV launched a chain on Avalanche yesterday, which is promising to modernize the vehicle title transfer process. So the new program promises to speed up the process of transferring car titles, and 42 million car titles are already on chain, which is pretty cool. The program showcases some of the real-world use cases for blockchain technology. So as a car owner in California, I'll let you know when and if I end up using this. Despite the news yesterday, Avalanche and its token AVAX were down 10% on the week. Okay, next we're going to talk about Compound. This was a huge thing on the news the last couple of days. So over the weekend, Compound, which is a decentralized lend borrow protocol, suffered a governance attack. So basically, a governance attack is kind of a way of saying any way in which people use decentralized governance to kind of manipulate a protocol, whether it's to take funds or to seize control of a protocol in what is considered a more malicious way. So the attack basically was a large token holder, known as Humpy online. They pushed through the passage of a governance proposal that allocated $24 million in comp tokens, or about 5% of Compound's treasury, to a yield-bearing protocol called Golden Comp that Humpy and a group called the Golden Boys controls. So this was the third attempt by this group, Golden Boys, to push through and acquire comp tokens through governance. And with the first two attacks being kind of thwarted by, people downvoting it, or, putting some sort of veto in or getting other groups involved. And this time, though, they did manage to get it through the voting process. So the Compound community was pretty quick to rebuke the Golden Boys, accusing them of stealing tokens from the protocol, pushing the DAO to and they were trying to push the DAO to implement limiting, a bunch of these protocols. So a lot of back and forth online. Humpy and the Golden Boys were like, we didn't steal these. We're going to be using them for our yield-bearing protocol. Who really knows? 24 million seems like a lot. So after a lot of back and forth, the Golden Boys did agree to return the comp tokens. Since then, Compound's head of growth also published a proposal detailing how the protocol can share fees with token holders, in what would be a turning on of the fee switch, which we've talked about a lot here. And that'll lead into my last token of the day to talk about. But comp traded down about 6% on the attack, but has since bounced back and is now up 5.1% for the week. Okay, next we're going to talk about Jito. If you're noticing a theme, it seems DeFi is of the news this week. So Jito is the largest Solana-based liquid staking protocol. They announced last week that they're going to be reintroducing a restaking service. So we have staking or liquid staking, and then we also have liquid restaking, which I know has gotten a little bit more confusing. So obviously staking is just that, when you're staking assets on Solana or Ethereum, providing security to the network, The idea is that protocols like Jito, Lido on Ethereum can provide a liquid derivative token for you to trade with, for you to be able to take as a representation of that locked asset and use it elsewhere within DeFi. So restaking, however, is the idea that you can take ETH or other assets that are already staked and then stake them elsewhere, providing economic security for something outside of just like that main layer one protocol. And the idea by creating shared security online, you make more efficient use of capital. So restaking has been obviously made very popular by Eigenlayer. There's been a bunch of competitors to come up out of the woodwork, but Jito specifically has launched a restaking, has released open source code for restaking. The idea here is that other Solana projects can use it and create a mechanism to set up economic security with other on-chain applications. Also, although the code's been released, Jito is not going to be implementing it into their mainnet application just yet. They're expecting to do so later this year. But Jito really got a boost on this news. They're up 8.9% for the week. Okay, last up, I'm going to talk about AAVE. So another decentralized lend borrow protocol this week. So AAVE, and they're the largest ones, mostly Ethereum based, but AAVE released two proposals in the past week, which is basically going to revise their safety module to cover protocol bad debt and to distribute excess revenue from the DAOs to stakers. So quite a bit there. But the first protocol is basically creating a new system called Umbrella, and they're going to be using a variety. The idea is they're going to use a variety of assets to cover bad debt in the protocol. So bad debt is created when a position is liquidated in that like lend borrow protocol, and the collateral that the user put up to take that loan out doesn't cover how much they borrowed. And this can happen, right? If you borrow USDC, but you loaned ETH and then ETH price crashes. And so it becomes worth much less than whatever USDC amount that you borrowed. So when this happens, though, a protocol is left with what's called bad debt, especially if it's basically that shortfall. And so when that happens, so basically in the past, they've essentially used the AAVE governance token to cover that bad debt. And they've rewarded people for staking AAVE in their kind of like bad debt pool called the safety module. So the new system, though, is going to relieve some of that self-pressure on AAVE. It's a little bit more complex, so I won't get into it too much, but it should be overall better and help the price of the AAVE token, or help relieve sell pressure on the AAVE token. So the second proposal is actually pretty much simply returning excess DAO revenues. They're going to be using it to buy back AAVE and distributing it to the ecosystem reserve, with a small amount being distributed to AAVE stakers. So while this proposal has a lot of community support, obviously everyone's really in favor these days of trying to make DeFi protocols have some sort of earnings component. And we've seen this with Uni and a lot of other projects. A lot of the critics of this have pointed out that excess revenue could be better used if it were retained by the DAO and put towards future growth initiatives. So we'll see how that nets out in the final kind of draft. But right now, a temperature check vote has begun today, and it is currently set to pass. It will conclude on Saturday. So that will be an exciting one. AAVE, though, it has surged up 19% on the week with this news. All right, guys, that's all I have for you this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear